Welcome, everyone. Really excited to see so many of you here today. It's been a long day. My name is Alida Saleh, and I'm the Senior Advisor for the Climate Champions team for the built environment. Today, I think we are going to talk about a very important topic about the built environment. The built environment is something that we really need to identify. What are we talking about? We talk about people experiences in the built environment. This is where we live, this is where we play, this is where, our experiences are formed. And it's really important that we harness the power of the built environment in the decarbonization journey, as we are a 21% contributor to the overall greenhouse gas emissions. So one of the key factors, along the day, we've been having such a wonderful day today, and one of the key factors that we've found is in enabling decarbonization is, first of all, mobilizing legislations, mobilizing finance, and to demystify how we get started on the journey and changing mindsets. If we can do that, I think we will collectively be able to accomplish a lot. Today, we're going to talk a lot about how we mobilize finance, what is the decarbonization process about. I think, as we know, over 50% of the world is going to be living in cities by 2050. It is our job to design cities that are built to optimize energy, our resources, and to make sure that we all thrive within the built environment that we develop. And as I mentioned, one of the key enablers of transition is finance. We also have to start thinking about how climate risk impacts the development that we're building. Climate risk is financial risk. And this is something that we really need to get at our core, is understanding that investments today are true investments and not a cost implication, and which will have downstream impacts in terms of asset valuation, not devaluation, and how do we avoid brown discount. So it's really important, as we're talking about financing the transition, to look at cost as an enabler for us, and cost as an asset, and as an investment. So on that note, I'm going to stop talking now and hand it over to Balsam to introduce the team, but very excited to hear from world leaders today about how they're thinking about transitioning the finance. Thank you.
Thank you, Alida. Good afternoon, everyone. My name is Balsam Nameh, the Head of Sustainability for DAR. And I'll be moderating this session on financing the transition. So a vast majority of the world's greenhouse gas emissions does come from buildings and cities. 2/3 of people will live in cities by 2060. And half of the urban fabric is needed to accommodate them, and that's not yet built. The world's building stock will also be doubled. As the urban population increases, it's urgent to transform buildings and cities as low carbon, sustainable, and healthy for everyone. This discussion, as Alida has mentioned, will be looking at the challenges and the opportunities financing decarbonization of the building sector specifically. One of the key enablers of the transition is finance. Questions that are most frequently asked are, what do we need to unlock finance? What are the resources to accelerate climate action? How can corporate, as well as financial intermediation, including foreign direct investment, help bring to scale the private finance that's directed towards achieving the net zero commitments and the Paris Agreement goals? And also, how can we use green buildings as a signal to unlock green investment? So in this session, you will be hearing from trailblazers of the building sector and representatives from financial institutions. And for that, I'd like to call our panelists to the stage, starting with Guy Granger, Head of Sustainability, Global Head of Sustainability and ESG Services for JLL. Guy, welcome to the stage. Nader Abu Shahdi. Nader is Group Treasurer for the new brand that's just launched 2 days ago, Sidara. Welcome, Nader. And Sharjeel Bashir, EVP and Chief Sustainability Officer at Fab Bank. I'll ask just a very general question, and just to really get everyone's thoughts on a very simple definition of one of the words that we've probably, most of us, heard so much in the past 3, 4, 5 days, and that is the word sustainability. We do see that different people define sustainability in different ways, and it's really very interesting to hear from people with different backgrounds, from the sustainability people, but also from the financial and treasury side. So who'd like to go first? Who'd like to tell the audience what sustainability is, what it means to them, and what the definition is?
Okay, I'll kick off. I've got a global role, I get to see what happens in countries and cities all around the world, and there are different standards and definitions everywhere. I think sustainability goes beyond carbon, but carbon is very measurable, so I'll start there. When it comes to the built environment, we should be really looking at whole life carbon. So it's all of the operational carbon to operate and power the building, but also the embodied carbon, which are the materials that are made to develop that building. So, and we use real life data to assess the whole life carbon. That's the direction of travel that a lot of cities are going in. So there's a lot more focus actually on embodied carbon. And when we're looking at developing new cities, that becomes really important for, I think, developing nations to learn from the developed nations about what's gone wrong. The other aspect is nature. So I think carbon and biodiversity and nature, the natural resources are very, very important to combine them both. Water, biodiversity, all of these factors. And that's, by combining that, you get to a very, very sustainable output, which leads to high quality of life. And actually a very good and strong commercial proposition as well. So that's how I view sustainability in the built environment.
Thank you, Guy. I guess from my perspective, I mean, I look at things a little bit differently. Being the treasurer and responsible for the balance sheet of the organization, I mean, just very simply, high level, I mean, sustainable or sustainability to me is awareness, values, principles, long-term vision, and that goes hand in hand with all of the work that we've been doing in terms of sustainability on the financing side, where we're applying, you know, all of the values, principles, and awareness that we've got into our funding and looking at ways of transitioning all of what we currently have on our balance sheet into green, you know, more sustainable financing.
I'm probably also in the wider definition end. From a banking perspective, looking at sustainability is more from the betterment for all our different stakeholders. These can be our clients, partners, government, stakeholders overall. That how do we create a more sustainable future, which can include climate, environment, social, diversity, all along those things. So for us, sustainability is more of an umbrella that covers the betterment for all stakeholders. And underneath this, you can have frameworks, ESG frameworks and something similar, and the different kind of products and offerings you might have. That's probably how I would like to define sustainability for us.
Alida, any insight on that definition?
It's really hard to take, you know, I think they've covered most of it, but what I look at it is simplicity. I think we need to simplify sustainability. It's a very complex term. People don't understand what we talk about when we're talking sustainability. Simply, it's using less. It's using less so that we're thriving in the future. So for me, that's the simple definition that I use.
I like that, simple. So Guy, despite the definition being a simple definition, do you still see a knowledge gap across the sector, the experts, the people, the communities?
There is a knowledge gap, but I think there always will be because we're constantly learning. I mean, no one has navigated this journey yet. So I think sharing information is really, really important. And we shouldn't let that knowledge gap be an excuse for kind of inaction around this area. So, you know, I'm a great believer in that we learn while we do. And I think that really, really applies to this space. We do not have all the answers yet. There needs to be greater education. And I must admit, I think that this green zone is amazing in terms of what it's doing for education to the local population, seen loads of school children going around. So I think we really need to sort of push the education and the knowledge gap in all areas. I mean, honestly, it's not just children. I think grown-ups are the big problem here, right? We haven't actually been looking at the world through a sustainability lens for most of our lives, so we have to upskill quite a lot. And some of the more conservative industries out there, they're probably the ones that need to go on the biggest educational journeys.
So education, Alida, how do you see that as sustainability experts we can bridge that knowledge gap that we all know exists?
I think first is surrounding yourself with people. Exactly what we're doing today. We need to sit and listen to people, what they think, how they think, and then ask questions. Why are we doing this? How are we going to fix it? Because asking simple questions helps you get along that journey. So it gets you past that mental block of perhaps I don't understand this journey, because the journey is a long journey. As Guy said, there will always be a knowledge gap. But coming to places like this, surrounding yourself with people, and then learning, like investing in the knowledge that's out there. There's so much out there. So even sieving through what's important and what's not important is another factor. But I really think that this is our future. And I think for the world to thrive, we need to be okay to be agile in the way that we learn and the way that we fail, because failing is also a part of learning. So we have to fail fast, learn fast, and move along the journey. So be open-minded. I think that's another big piece of the puzzle. But I think sustainability will always be complex because we are going to an unknown space that we've never been. We don't have the best practices from before. We know the practices before need to be adjusted and modified. And collaboration, I think, is key for acceleration of ambition.
So to accelerate ambition, we rely a lot on the banking sector. And from your perspective, how do you see the community's engagement, their commitments? How do you see that evolving to date? And how, as a bank, you're supporting from your perspective to really get people to align or to sign on commitments to 2030 or beyond?
I think there's a couple of things. Maybe let me start by taking a step back. I think that not only the banking sector, everybody have a responsibility to support the transition that is required, right? So everybody have this role to play to engage with your stakeholders, to focus on how they will transition specifically. From a banking sector perspective, I think that we have an additional responsibility because we have touch points across multiple industries, type of clients, and so on. So we speak with agriculture, transportation, aviation, oil and gas, and so on. But at the same time, we speak with individuals, we speak with SMEs, large corporates, governments. So we cannot just focus on one specific sector. We need to be available for all of them. And the way we can influence is multiple ways. If we start by the larger corporates, we can, of course, engage with them by giving financial incentives. That's one way to do it. But it's also about raising awareness, it's about establishing partnerships, and more importantly, guiding them on this journey specifically. So as an example, we were the first bank in the region that made a net zero commitment in 2021, 2 years ago. And for us, the commitment was easy to make because our own footprint is not relatively big, right? Because we don't have production facilities, factories, etc. The biggest challenge we face is in our scope 3, where every dollar we finance has emissions, and those are the emissions that we need to reduce, right? That's where our influence come in. So previously in the banking, when we just used to look into risk and reward and say, okay, we're lending $100, when are you going to pay us back? That was the assessment we did. Now we're looking at, okay, we're lending you $100, what are you going to use it for, right? What kind of emissions are you going to create from these $100? And if these are creating emissions, how will these emissions reduce in the future? What does your transition plan look like? So we are starting to engage with our clients to understand what are their transition plans. And we, of course, started with the largest clients. This year, we have spoken with more than 30 of our largest clients. And probably next year, we're going to take a couple of hundred clients where we have those in-depth discussions that what does your transition look like? And again, we're not in a place to force people to do something. Our focus is that we need to set a direction. And we are very helped by the leadership in this country who has made the commitment to net zero by 2050 already, which means that all the industries know that this is the direction that the leadership have set. This is the way they need to go. And how can then the financial industry support on that, right? So I'm not here to tell people, no, we're not going to lend you because you're not reducing your emissions. Instead, I want to discuss what does your plan look like, right? Because if you don't transition, what's your business model for the future, right? Do you want to end up like another Blockbuster or Kodak who didn't transition to the new reality and be out of the business? Or do you want to transition, utilize that opportunity, invest in that change, and we would like to be supportive in that change?
Excellent. I want to stay with you. Just
Okay.
a very quick note. You've mentioned that you've committed to net zero yourselves within your own operations. So can you share with us some of the main lessons that you've learned through this process, despite being potentially, you've mentioned you have a small footprint, but anyways, is there anything that you can share with the audience?
Yeah, I think, okay, so so we made this commitment back in 2021, 2 years ago. What was important for us at that time was that since we were the first bank in the region who made this commitment, it was for us to understand that how do you start this journey, right? And what we did was that we joined what is called the Net Zero Banking Alliance, which is under the Race to Zero, where basically over 100 of global banks have come together to define how should a transition look like for the sector and how is it supported by the science itself. So we joined this alliance and joined that framework specifically, which basically means that you go through your portfolio, loan by loan, asset by asset you have financed, and say what kind of emissions does that create and is financed, right? That becomes our scope 3. And even though that I said our emissions are low, but our overall scope 3 emissions are extremely high, right? We are like 95% of our emissions are scope 3 emissions. So we started to go through this. Earlier this year, back in March, we then set the targets for the 3 highest emitting sectors in our portfolio: oil and gas, aviation, and power. Those made up more than 60% of our finance emissions. Going through every single loan we have financed, every single project we had financed, had multiple dialogues with the clients to understand how does that look like, how is your transition, looking to the science, that what does science require for us to be in that trajectory, and what is that needs to be done, and engaging with our clients on that. And just, we're in December now, so in November we announced additional five sectors, which is agriculture, commercial real estate, very relevant for the discussion today, steel, cement, and aluminum. So now we have covered more than 90% of our financed emissions by those 8 sectors, and we have engaged with all the major clients in these sectors to have a dialogue with them. What is your plan? How are you transitioning? How can we support in this transition, right? The materials you're building with, what does it require? How does that transition look like? Aviation sector specifically, hard to abate sector, very dependent on technology. Sustainable aviation fuel is very expensive. How does that transition look like? So we have engaged with our clients on that side, which is one part. And of course, when I say that we have set targets, people always take this as a negative. Are you going to reduce our lending? No, we are here to support you in that transition. The investments you need to make that transition, that's why we are here to support you, right? Very important to highlight. This has nothing to do with us reducing your lending. And the next question people ask me is, oh, what about in the future if we're not transitioning, right? And I always come back, if you're not transitioning, what does the future look like for you, right? That's the question you need to answer for me. And the last part I would just mention before I head over is that as a part of this commitment, we also made a commitment that we would facilitate more than $75 billion by 2030 in sustainable finance, exactly to support that transition. So this was an 8-year target we set 2 years ago. And in the first 2 years, we've done more than a third of that target, so more than 27 billion. And just yesterday, we increased that ambition to 135 billion, which is more than 500 billion dirhams, basically, to support that transition that is required.
That's excellent news. Nader, what are the hurdles that you're facing? And if you can share this with us from not only a Middle Eastern perspective, but also coming from a privately owned company, so that then we can hear Guy's insight as to, privately owned, publicly listed. So yeah, Nader, if you can share.
Thank you, Balsam. Look, I think, from our perspective, just a couple of things. I think we're very grateful for all of the commitments that have been made in the banking sector. We're our partners, Fab, and the work that has been done in terms of sustainable lending in this country. With a commitment of $1 trillion over the next decade that's going to be spent, I think we're very fortunate to be playing in this ballpark. As an organization, apart from our 2050 signing to the UAE corporate agreement, we had already signed up to the 2030 World Green Building Council commitment. And I think my job has been made quite easy, by our sustainability experts and our engineers. From our perspective, we were far ahead on the journey. But at the same time, keep catching up from a banking perspective in the region. I think some of the hurdles that we've been facing are that, the banks have been trying in a way to make a one-stop shop purpose in terms of the KPIs, meeting different KPIs and setting KPIs for corporates. Carbon has been a standard, but then when you start looking at others, when you start going into the ESG and you start looking at the S and the Gs, things start to differ. In our part of the world, for example, when you're talking to a bank and you start talking about, gender diversity, and you start talking about women in a country like Saudi Arabia and what have you, and setting targets on that level that are at par with other parts of the world, it becomes quite a dilemma. Setting those standards for a global organization that is borrowing predominantly in its home base here in the UAE. So I think that's one of the key hurdles, but opportunities as well, because from that perspective, when you look at the amount of work that is going in and the depth, when your bankers are starting to look at loan by loan and helping you on that journey, there is a lot of give and take. But I would take that from a banking perspective. The other key hurdle is that, what we do on the inside as an organization is one thing, but again, what our clients want to do is another. Our DNA as an organization is that every single design that comes out of the firm is by nature sustainable. But are the clients willing to take it, that leap for them to go ahead and start looking at things from a different perspective? Usually not. So I think those are the two key aspects or two key hurdles. As a privately owned organization, private capital helps us a lot. And we're really, really fortunate because, as we said, my definition of sustainability, awareness, values, principles, all of that ties into private capital and to the DNA of this organization. When you look at what private capital can do, we can take long-term visions that are not necessarily about bottom line tomorrow. And I think that is a lot of what the market is lacking at this point in time. So from that perspective, aligning ourselves in terms of our capital for our projects and for our business, it hasn't really been an issue or a hurdle. I think the private aspect has just given us a quantum advantage over all of our competition, and that's what's making us really the firm of choice in our space.
Yes, I'd agree that being private gives you a bit more freedom to make choices. I work in the listed sector, the US listed sector, which does have private capital behind it, but that private capital moves and talks in different ways. So actually it's quite an art to navigate your shareholders in a listed company. And because we are driving a big sustainability strategy, we're trying to attract more long-term private capital that is prepared to actually see you and support your short-term investments for long-term resilience. And our biggest investor in JLL is Generation Investment Management, whose chairman is Al Gore, and they push us really hard actually to hit targets and to make those investments. But you've got other shareholders that dip in and out. They invest in us for a couple of years and then they make their money and move on. So we have to navigate that a lot more carefully. There is complete transparency in a listed company. So I'd say for citizens out there, listed companies are very useful because you can see exactly what's going on inside them. There is an incredible amount of accountability to the public markets. But with that comes I suppose there are strings attached. You have to balance the short term with the long term a lot more. But you can still drive sustainability strategies. You just have to be much more articulate in terms of what the return on investment is going to be.
Alida, and I just want to ask here a quick question. So, based on our experience in the MENA region specifically, committing to targets and KPIs and then getting to them is a bit challenging because of the cultural differences that we see. What are the challenges that you have seen from your perspective, being a big driver of that commitment in specific, and how does this align with the challenges that the gentleman have been mentioning as well?
Thanks, Balsam. I think first is we have an opportunity because the UAE, Saudi Arabia, Bahrain, Qatar, Kuwait have all committed to net zero pledges. So first, that's an enabler. But the challenges come because we're in an emerging market. So emerging market has different challenges than developed markets. And our challenges are legislations. We're trying to do something. We're trying to decarbonize and be optimal, but we have to really look at regional nuances because what works in Europe or Canada or America doesn't work here. So we have to adopt and adapt our designs to fit regions. Second is also looking at how do we mobilize finance, because although banks like Fab Bank and HSBC, Emirates, NBD, and the likes are mobilizing finance, it's not happening at the rate that we require. And those who do need capital don't even know they exist. They don't know how to capitalize on getting that type of financing. So there is an education piece of us on explaining to regional developers that there is sustainable finance that you can have. We also have a lack of a rating globally. There's a lack of rating systems that are internationally accredited. So regionally, when you look at, for example, Estadama, we had a conversation around a round table with different financial institutions, and they said, well, when we look at Estadama versus Leeds, we're more prone to give money to the organization that's using LEED as their green building design versus Estadama, which really puts us back because Estadama is very local. It's a very locally developed rating system. So I think local banks, global banks need to understand local rating systems to put it into their system, to accept and understand what the credibility of that rating system is. So I think there are many different challenges, but I think mobilizing of finance, and we're seeing, for just like Fab Bank just talked about, the amount of money that they're investing in the transition, that transition is absolutely essential in region. So I think the challenges really comes down to how do I get started? What access do I have to finance? What levers do I need from the legislations to move the market? Because until things start moving from a legislative perspective, it's hard for developers to take that upfront cost because it does become challenging.
So, Sharjeel, I don't know if you want to add to what Alida has said, but my question here, on top of that, is that what is the cost of not aligning with the transition? What are the implications there, the financial implications?
I think the financial implications are huge, if I can answer on this one first, right? And this is not only from a banking perspective, this is about your business model, right? I truly believe, and I think there are more people that believe, hopefully everyone, that this transition is the biggest reallocation of capital, right? What we have today is not enough for where we need to be by 2050, if we go for the net zero 2050 scenario. we need to transition significantly, we need to transition very fast. And we can see that. And again, we often use this in the bank as well. All our stakeholders are transitioning. We have clients that are now willing to pay a higher price for a sustainable product, right? So this was not the case 5 years ago, right? And we're speaking about regionally. I'm not speaking about the global research. I'm speaking about regionally. In the region, people are willing to pay a higher price from a sustainable product or a sustainable brand, okay? If we are trying to attract the best talents, what they ask us is, what does your transition look like? How are you supporting the planet? What are your plans from a sustainability perspective? Regulators are pushing us that we need to prioritize sustainability. Our investors are pushing us, right? By 2025, which is not very far away, more than 50% of the global assets will be linked to ESG. 50%, okay? So this is the scenario we're looking at. All our stakeholders want transition. So it's not about what the banks want, it's about what your clients want, right? So very soon, when the people are looking for a new flat, new place to live, the priority is going to be that this needs to be sustainable, right? And this is going to cost more, but yes, but it has a long-term value. It's the same, some of us who are old enough will remember that, 20 years ago, solar panels were extremely expensive, right? Not a lot of people, the payback was 10 years plus, and the banks wouldn't finance them and so on. And today, you have a maximum 3-year payback for them if you go in a private house, even less, and banks have no issues with financing them, okay? So that's a transition that we need to go through. And again, the bank's role is, again, we stand for financial stability, so we can't just finance every innovation as such, but we need to make sure that it's a viable business and make that transition. And then there are different stakeholders in that financial value chain that support different things, right? When we have startups, we have incubators. As an example, we have Hub 71 in Abu Dhabi that supports these initiatives, where the financial sector goes and support them to put money there. We have credit institutions, we have development banks that can support people in these different situations. So again, for me, the transition is relevant because if you don't transition, you might not have a business. And then it's a totally different discussion you need to have with your bank, right? But that's the key thing. I can't imagine there's a bank out there right now that is not willing to invest in a bankable project. The question is if it's not bankable, right? And I can give you an example of things that are not bankable, probably are different than the building side. Hydrogen. We all know that hydrogen is going to play a key role in the future energy mix. But hydrogen projects takes 10 years plus. It's still a new technology that is being developed. We don't fully understand the depth of the benefit they're going to give us, how big the benefit is going to be. It costs a lot of money. So when you're looking at it as a bank perspective versus a 10-year plus hydrogen project where I need to put a lot of money versus a 3-year solar farm, I know where I'm going to put my money from a return perspective, right? But hydrogen still needs money. That's why we need the development banks. That's why we are having this COP where we are speaking about climate finance being the key, because commercial banks cannot do it alone, governments cannot do it alone, development banks cannot do it alone. You need to bring together all these different stakeholders to come together to say, how do we mobilize financing, right? And that's why it's great to see that we, over the first 6 days, has mobilized more than 85 billion US dollars, because these stakeholders are coming together and says, listen, we need to work together here in order to make that transition. And 85 is not enough, and that's why His Excellency Dr. Sultan Al-Jaber keeps speaking about making billions to trillions, because we do need trillions in this.
Yeah, if I could just add, I agree with everything you said, actually, that this will be demand-led. In other words, the business model has a reason to do this because users or tenants of buildings will be demanding it. But that doesn't mean that every business goes there, because there will still be users and some tenants who won't demand it. And what we're seeing in the developed world, actually, is there does come a tipping point where both finance and insurance say enough's enough. You've had enough chance to do this. You're not doing it. There are plenty of people who are doing it, so I'm going to follow those people over there. And we're just seeing the first evidence in Europe specifically of actually real estate portfolios that do not have a credible transition plan, which often involves a lot of capex. It involves a lot of intervention, replacing heating systems with electrified systems. We're seeing the first evidence actually that they cannot get finance. And that is a really noticeable tipping point. We're seeing evidence in the US, in the Sun Belt in particular, but also areas that get these extreme temperature rises followed by extreme rainfall showers. You cannot get insurance. You know, the last insurer left in town is the state, right? If you cannot get finance and cannot get insurance, I mean, your business model is then seriously in trouble. So I think finance and insurance definitely will have a role to play as a penalizer as well down the track, right? Because you've got your targets to hit, and if some of the businesses that you lend to don't play ball, you'll do exactly what you're doing there. You'll align your risk towards those that aren't. So I think it's going to be really interesting how quickly that happens, but we're seeing in some parts of the developed market that it's very much demand-led, but sometimes finance and insurance definitely has a role to play in terms of like drawing the line.
If you can just comment on that one, right? And I fully agree with you. You will have those situations happening. But it comes back to a little bit, if you go back 20 years, right? Digitalization was a new thing, right? A lot of business said, oh, we don't need a website, we don't need an app and so on. I don't think there's a lot of businesses out there today that doesn't have a website, right? And most probably also have an application. It's the same with ESG and sustainability. By 2030, I can't imagine businesses have not embedded ESG as a part of their core. I simply can't imagine it. Because then you're going to be in serious challenge that how are you going to run a successful business for the long term if you don't embed ESG in your business. It needs to be part of your strategy, right? Because it's going to impact everything. It impacts from your procurement, from your financing, from your core products, the way you treat your employees, your clients. It covers everything. So it needs to come into that core. But I fully agree with you. You will have things that, you know, there will be people like, I'm sure there are people out there today who simply doesn't want to use a computer, right? Or companies who doesn't want to have a website. But that's an active decision you're going to take because you don't want to follow that trend. I'm sure there are going to be people similar to that. I just see them be very, very few and not being the majority that will require that change.
Nader, any thoughts on the importance of ESG that Sharjeel has mentioned, especially that there is at some point some bad publicity around ESG and that there's very good publicity around it. So where do you stand? What are your thoughts on this?
Look, I think, and I agree with most of what has been said by my colleagues. But one thing I think at this juncture that is critical, at least in this part of the world, is government initiatives. And from a funding perspective right now, I mean, people are struggling, companies are struggling with high inflation, high interest rates, and you know the cost of transitioning is high on companies. We're all willing to front the bill, but at the same time, a little bit of help is always welcome. And to that effect, I mean, I do differ a bit in what you said in terms of, you know, the corporates that in today's world are willing to pay a premium for a sustainable loan or a sustainable product. I mean, they may be, you know, a few. I don't doubt that, but the bottom line here is that, you know, we all need to work together for a certain target, and the government's role is critical in that journey.
I think we also have to think about inclusion. And so when we're talking about the developed world, we're talking about the emerging market, we have a significant amount of developing world that don't have access to capital. So we really have to think about how are we financing their transition, because they're barely surviving right now and making ends meet. So I think the part of the transition is also how do we mobilize finance? How fast are we mobilizing finance? Because making announcements are great, but when the rubber hits the road is when they actually have projects that are mobilized, empowered to make decisions, because environmental, social, and governance comes to life when people are thriving up and down the value chain, not just sort of up and in the middle. So I think we need to take everybody along the journey.
That's an excellent point, Nader.
Yeah, just to go back to the original question, I mean, in terms of you know, some of the hurdles, and you made a point, Guy, about education and where we are in this green zone. And I think from an education perspective, I think the banks have done quite a bit, but I think there's still a lot more that needs to be done. Educating clients is one thing, and educating this whole community about what you guys are doing. I mean, your top 100 clients, and then a second wave of a second and a third. I mean, is one thing, but there's a lot that we're all trying to do, right? And there is a bit of a catch-up game that's going on. So I think from that perspective, education, especially in the developed world, is critical.
And I think education comes from concrete examples, right? So, Guy, can you share with us any concrete examples of, financial benefits for real estate investors and developers?
Yeah, we're seeing lots and lots of proof points, if I'm honest. The sort of first movers that are creating low carbon buildings and developments in the world are seeing massive benefits because there's a huge increase from corporate tenants, in particular in the commercial world, to occupy low carbon buildings. And there are very, very few of them around. In fact, there was a statement made earlier this week that in the US, there are only 8 net zero carbon multifamily residential blocks, right, in the whole country, right, which is amazing considering the size of the country. So this product is really rare, and particularly playing into the corporate tenants who are all here, who have set these targets. Even your footprint is small, but when you take an office for your bank, you're going to be looking at how low the carbon it is. We are seeing at a time when the demand for offices is going down as people work out the new dynamic of the workplace, we've got rents in all of the major cities going up because there's such a limited supply of low carbon, high quality office buildings. So that is real evidence in real time that this pays. And for me, one of the biggest takeaways from the COP this year is that the business case has never been stronger. So of course we're doing this with real purpose to bring a much better quality of life to everyone in the world, but the business case is enormous now. The cost of inaction is much, much greater than the cost of action. And actually, I think we're underestimating the value that's being created at the end of these things.
Absolutely agree. And to Guy's point, there's a lot of value now that the business case is making more sense. How do you see from a banking perspective the appetite being today in the MENA region specifically? Let's say in the GCC region for now.
For sustainable projects, right?
Yes.
No, I think the appetite is high, a very high appetite. I think this is also proven by the announcement that the UAE banks made the other day of committing to 1 trillion, to mobilize 1 trillion dirhams by 2030, which is a significant amount. So I think the appetite is very, very high. I think all my colleagues, peers across the banking sector is very keen to support on that transition and those projects that are out there. Again, I can't imagine that you come with a good project that no banks wants to support on that. I think it's important to remember that people feel that we need to support sustainable projects. I think every bank wants to support sustainable projects, right? For us, there's not a difference between a sustainable or conventional project at this point. It's just like Islamic and conventional products. When you look from a banking perspective, there's not a difference in our appetite on this. We actually want to do much more sustainable than everything else because we know this is the future. The point is right now that we are still, as it was mentioned very clearly, we're still in a process of raising awareness. We're raising awareness internally and externally, right? And this is important, right? So we have mandatory trainings for all our employees, as an example. We work with a lot of our clients to try to, share that knowledge with them as well. We are running executive programs for C-suite of our clients as well, who are the decision makers to understand why these decisions are important. We are not only for the finance departments, but also go wider in their organizations because we all need to share this knowledge in order to get this to accelerate. So I think the appetite is absolutely high for sustainable projects, for green loans. So I don't think there's any alignment in that part specifically. Where the challenge is, as I mentioned, upskilling, green skills are key across sectors, not only in banking, but across all sectors. Everybody needs to skill up these specific industries to get a better understanding. What does this mean for their specific business? And then we, of course, come in from a finance angle as well to say, how can we support that specifically as well?
Great. Maybe now we'll take some questions from the audience before we close. Do we have any questions? Yep. No, I'll give him the mic.
Thank you very much. My name is Joseph Rahal. I come from Sierra Leone in Africa. Thank you very much for the wonderful presentation. I've really learned a lot from this, and I hope to carry the knowledge as well. Two things that keep bothering my thinking is about the ability of the banks to meander around this whole issue of greenwashing. What would be your ability to really understand who is coming with potential projects that will be supported, but are really greenwashed kind of projects? That's one. And the second question I have is about, I was in one of the platforms where there was this discussion about experiences. And somebody asked, well, we don't have, we go to the banks and we are not experienced enough to get loans. And the question came back, is, can you invest your money in a company that hasn't got experience? I'm bringing back this question simply because there could be a very high potential of success where a company behind a particular innovation is not experienced at all. I mean, in terms of the number of years of doing business, but they have this enormous potential of something that is going to change the whole thing of sustainability. How would you, as bankers, as financiers, really understand this, and how would you really want to work with such companies? Thank you very much.
Joseph, I'll start. I'll just thank you for the question. I mean, just from a client's perspective, what I can tell you is that, our bankers are just giving us, a very difficult time about the greenwashing, to the extent that, for corporates that have stringent ESG policies in their organization, it's one of the key attributes that, is making it very difficult for us to set our targets with our banks. But I think Sharjeel is a lot better positioned for this question, so I'll pass on to him. Thank you.
So listen, greenwashing is an actual risk, and it's a very high risk, and I think it's a risk that we're going to focus a lot on in the future as well. But I think that greenwashing, from my perspective, come from two positions, right? And we actually had a discussion in our pavilion earlier today about greenwashing and green hushing, which I'll come back to. Greenwashing basically can be intended and unintended, right? Intended is what you on purpose are claiming something you're not doing, which is basically fraud, right? And that is not something you can defend yourself against. People, unfortunately, keep doing fraud, and we can try to mitigate it as best possible way. Then there's the unintended part of greenwashing, where people believe that they're actually making a difference, but they are not, right? Because we do not have enough awareness of these different topics, right? I can claim that on the solar panel on my roof is, removing all my electricity, because that's what I was told. And I go and claim, oh, this is removing all my electricity, it's renewable energy, right? Then I figured out that the manufacturer only told me half of the truth. That is unintended, right? So we need to differentiate between things. And unfortunately, right now, there's a bigger part who's doing it from a fraud reason than the other part. But that is starting to happening now because we don't have enough awareness. We actually just launched a guideline today. You can find it on our website. I can do a little bit of a commercial here. A paper about greenwashing and green hushing. Because unfortunately, greenwashing has now taken over to green hushing, where people are actually doing something on sustainability, good stuff. They're afraid of being caught for greenwashing that they stop speaking about it. When they stop speaking about it, they stop working with it as well. So we need to find the right balance. Things are not black and white here, right? So that's the one part. The second part, I think, was about a specific project you mentioned that, why does the bank doesn't finance this? I think it's important to remember, and it might not work in this specific case, but there has never been more capital accessible than there is right now, right? You have never seen so many startups that have different kind of incubators, accelerators, etc., that are supporting different initiatives, right? We have guarantee schemes taking place. We have funds in the UAE. We have Khalifa Fund, who supports the SME specifically. We have development funds, Emirates Development Bank in the UAE specifically. You have the commercial banks normally that do that. So there's a kind of a value chain depending on where you are on your journey, where these different types can support you. Because again, we as a bank, as a large bank, are not the expert within each specific technology or each specific startup, how we can support on that. That's why these accelerators, incubators are created to go and assess them, support you with that journey, and once you're big enough, you then move on to the next part of the value chain. That's how that has been set up. So I think that's the best answer I can give on that specifically without knowing that specific project. But I think that's the kind of the value chain that exists to support these initiatives in the different part of your life cycle as a company, where you can get that support financially that is also needed.
Just to follow on that, I mean, in terms of ventures, our subsidiary DAR has just incorporated its venture capital arm. We've launched 2 incubators in the design and engineering space and the EA space in general. And just to give you some figures, our first intake, which was opened up, the applications were opened up a month ago. We've had over 450 applications come through in a span of 2 weeks with outstanding projects from all across the region. We have people submitting applications, from Saudi all the way to Ramallah, and we're really, really proud of this initiative, and very happy to share thoughts on this afterwards with you.
Yep.
Okay, my question is, since the third world countries are far behind in the sustainability approach, so do you think that is there any banking plan to connect the companies who just want to connect with this idea here, and the financing is only available for the regional companies?
Sorry, can you repeat the question again?
For example, the other countries like the third world countries who are far behind in sustainability approach, and the ideas are not very well developed over there. So if there are any companies who are trying to come up with this kind of initiatives and project, so how do they approach, since they are not a part of the MENA region?
I think that the countries who are not part of the MENA region should typically approach your home country banking system. That will be my initial part, right? So we, as an example, are placed in 20 countries globally where we will support our clients, or we support our clients going to the different markets, right? So if we have one of our strategic key clients, they move to a market where we are not existent, we will still try to support them as much as possible by financing that specific project or do it through some partners. So we do that. But I think if you're in a market, the best thing is to go to your local bank. They will typically have a better understanding of that specific market. So yeah, that will be my recommendation.
Thank you.
Yep.
Hi. My question is regarding smart cities, maybe. With the rapid evolution of technology and the increasing emphasis on sustainable urban development, smart cities are becoming a more focal point on future living. However, there's a growing concern between the balance of technological advancement and environmental sustainability within these spaces. From your perspective, how do you envision the integration of emerging technologies in smart cities while maintaining or enhancing their environmental sustainability?
So I think that's a really good question. I mean, you have to have a strategy around it because you're right. smart technology comes with a price. I mean, data centers have almost as big a footprint as aviation right now. Okay, and we probably don't have enough data centers for the direction we're going in. So we need to get much smarter around how we provide clean energy, how we have sustainable water provision for everything that comes with smart technology. But I would say it is also about combining those technology advancements with a balance with nature, with this circularity. So I totally agree with the leader. We need to use less, right? We need to demand less, and that will enable us to provide more to go around. There will be far more equity. So, yeah, I don't think cities are purely around advancement of technologies and growth. They are also about efficiencies. They are also about actually quality of life and balance and nature. And so we have to get this right. You've seen plenty of cities that have just gone round the smart vertical living without all the rest, and it doesn't last, right? You have to retrofit it. So I think it's really interesting to see what some cities like New York, Boston are going through in the US, which is a complete reinvention of what they previously thought a city was about, which was the car, basically. Those cities were designed for the car, and now they're trying to design them more for people. And it's got to go through a real metamorphosis. Technology will be a great enabler for that, but I think circularity and nature has a really important part to play as well.
Sorry, do you think we're at a point where we're capable to find a balance between both? Because right now you see like really ambitious projects such as NEOM emerging and...
Well, I think a lot will depend on how public authorities respond, because it requires the vision to be able to, and long-term strategic thinking. And, you know, city authorities are very, very, you know, they should have the well-being of that city very much at the heart of the strategy. So I think public authorities really do matter in terms of sending a signal out to the capital in terms of what the long-term direction of this city is going to be. And they will not all be the same, right? Definitely some cities will go through that vision of being completely balanced, and others will be much more after one industry or one to capture one thing. But I think cities, but the very successful cities of the past and the future, the most dynamic cities, the ones that are most flexible, the ones that attract a variety of different social and industrial sectors. So, you know, I think you've got to be careful when you try and be too one-dimensional when you approach a sort of city strategy.
Thank you.
I'm just going to add to that we also have to look from a regional perspective. If you look in the MENA region, if you look at sustainable architecture, MENA region, if you look at Islamic architecture, was very sustainable. It has always been sustainable. It had no technology. So I think we need to look at what good looks like regionally and apply those regional best practices and then enhance them with technology and use nature-based solutions, because I think, just like Guy said, it has to be a holistic, but I also think it has to be regional. What you believe works in New York doesn't work here. So regional nuances becomes key to accelerating decarbonization.
Great. So the voiceover has reminded us that we're at time for like 4 times now. So I just want to close with a quick message from each and every single one of you. We're halfway through COP, and that was quick, right? We prepared so much for this, and it's almost done. What is the main message that you can leave us with today when we speak about finance, when we speak about decarbonization, and what are the main key takeaways of what we've heard at COP so far?
I think because this is a COP of action, I think we need to collaborate. I think collaboration will really help accelerate ambition. So that's my one takeaway is, if you don't know what you're doing on your decarbonization journey, ask. There's nothing wrong with not knowing what you do. Surround yourself with people who do know what they're doing, and learn and be agile.
for me, this year represents the clarity of thought that this is not a choice. This is a must. And I don't say that from a planetary perspective. I say it from a business model perspective. The cost of inaction is so great, and the value of action is so great that if you pause, then you are putting your very business at risk.
We're fortunate that we live in a country that really has put a lot at offer for us. Let's tap into it. And my key takeaway from today is simple is more.
I think all the good stuff has been said. I think the key thing in order to decarbonize, which I think is critical to have a successful transition, is going to be green skills. I think we speak too little about the capabilities and green skills that are required. So I think that is going to be the key thing. If we need to have a successful transition to a low carbon future, we need to invest. We need to do everything internally and externally we can do to upskill people across industries, to make sure that they are capable to address the challenges we're going to face in the future.
Well, thank you. Thank you for delivering a very insightful and really diverse panel. Thank you to all of our audience, and thank you, everyone.
Thank you.